Welcome to yet another video. I'm going to share top 6 learnings from year 2021. And these 6 learnings, whether you're a proficient investor or you're just getting started, definitely there'll be some takeaway for you because it is important that we keep learning and reinventing ourselves to have a profitable journey in stock market investing. And in this channel, I share all those insights, whether it's about stock analysis, whether it has to do with investing psychology, and anything to do with productivity, which improves towards the investing journey for individuals for the wealth creation. If you're new to my channel, hit the subscribe button as well as hit the notification bell so that you get notified for my next video because I keep coming regularly with some great content. And also, if you're liking our content, do give a thumbs up. And also, it also feeds up to the YouTube algorithm so that it keeps recommending you some of these videos going forward as well. So without further ado, let's get started. Top 6 learning from stock market in year 2021. So let's start with the first one. Media advice. Big no. What do I mean by that? I have not been looking at any of the channels for last several years. I don't remember when was the last time I looked at the news for any stock ID. And I wonder what these all the business news channels and some of the, I'm not saying everything on the same light, so please take it from pinch of salt. What I'm saying is that everyone is giving a buy advice on stock market. When you see the business news challenge, all or from the matter in Twitter or Facebook, or when you go into your get together with social gathering, that something you need to avoid completely. Okay, unless you become self-sufficient and have your own methodology which you want to take it as the philosophy of investing so that you can benefit out of that, because these people who coming in and talking about buys, sells, and recommend mainly buys, they don't have any skin in the game. You're going to be investing your hard-earned money, so you should not look at any kind of tips from those media channels, because they, who knows, they're coming in with their own agenda, their own approach. And you can search up on Google, you'll find various examples which has happened recently in the leading news channels. I don't want to name anything on that at the moment, but I just want to tell you that if you are making your trades or investments based on media advice, you should stop that and focus on learning and focus on reading books, focus on learning from somebody who has already gone through that journey and have a focused learning and structured learning. Okay. And once you have that, what I do is I generally look at some Google alerts so that I get some alerts myself rather than me searching for news, and very specifically what I'm looking for, so that that helps me in my decision making process rather than picking news and then taking the decisions. I will make my own decisions of what I should be investing in, or what should be the stocks I should be putting in my watch list, and then put a Google alerts, or for the matter, go to the media houses. And if there's any management who has come on the channel, because as a retail investor, I may not have access to that management of the company, and I can just take some inputs, what exactly management is talking about, and so on and so forth. So that's my first advice. So media, avoid media and focus on only on your learning and your own way of finding it what's good for you. Second is, one of the things I have seen it, most of the analysts is talking about forecasting. Somebody's forecasting the business, what business growth will be. Somebody's forecasting on the what the price will be. Some people say, we start with, tell me the next multi-bagger, tell me the stock which will double in a year. That's where we get started with the wrong approach. And that is where you should completely avoid, because asking the right question also means you are starting right way. You should rather ask, how do I focus on my risk mitigation for the capital production? Okay. As our legendary investor Warren Buffett says, that you should only remember of rule number 1, make sure that you don't lose money, and rule number 2, don't forget the rule number 1. That's the main thing. Once you understand how do I risk mitigate myself, how do I have my hard earned money capital protection is taken care, then only way possible is that you will add up to that, and that will be the gains. Okay, so don't get into the forecasting approach, because that will definitely lead you in the wrong path. So moving on to the next point is be a learning machine. Look, stock market is people come in here to make fast, quick money, and definitely that's if that's your intention. I don't think so. This is the right place for you, because when I look at any company, I look at company for over 5 years or hold it for as long as possible. Then that's where I start working through, and that is how I have started putting my stocks into buckets of long term portfolio and the lab portfolio, where I do research on the companies which can be potential long term winners. Because a lot of new age companies like space technology, AI, IoT, and even for the matter agri-tech, drone technology, eh, and we're talking about electric vehicles. If you can go and check, I will give you a link below on right hand side. I did a whole deep analysis on the rare earth and how that value migration can help. And since then, the stocks which I discussed has been giving 3x, 4x returns. I don't remember the exact, but it definitely more than three times in within a year. But then the whole thesis started being learning about what exactly is changing. And the rare earth is an element which goes into electric vehicle. Without that, and it's a very strategic material, but I'm not don't want to go into that. You watch that video, then you understand what I'm saying. Be a learning machine. Read books, read from learn from others, but every day improve on your process, improve on your approach, improve on your investing style, improve on what exactly it is. And I will leave a link below. I did a video, the last video, if you go in, I shared what it takes, right? So you can look at that link, and that's very, very basic top six things, steps you need to do for you to have a getting started in the stock market investing. Definitely that will help. Okay, be a learning machine. Every day when I'm going to bed, I want to see what did I learn, no matter what it has to do with investing or it has to be with life in general, because everything put together helps you in that wealth creation journey, right? Because if you're learning, not only you, it helps you in the stock market investing, picking up the right stock, also it helps you in your job, or it also helps you to educate your children's. It also makes you wiser, because our minds always gravitate towards making quick decisions without any basis. Once you are reading and being learning, you automatically switch to a um, mindset where you always making rational decisions. Okay, and in investing in journal specifically, you should work towards being your own fund manager, because no better than you can make yourself a decision which is good for you and for your hard-earned money, right? So you'll work towards that. Diversification is a key. And what specifically I want to drive a point here is avoid diversification on your core portfolio. People don't have a demarcation in terms of what is my core portfolio, what is my portfolio which is trading. And for me, trading, investing is the same thing, because we follow approach of blending. In peaceful weekend investing, we follow the approach of blending fundamentals and technicals to outsmart the fund managers or smart investors, align with them. But I will not go into that detail specifically in this video. But what I'm trying to point I'm driving is once every 3 months, when as business health wise, when the quarterly reports comes in, so you don't spend your energy on those very focused 10 to 15 or max 20 companies which you are invested on it for large part of your capital for long term growth. And then there is a 30-40% of your capital is only focusing on, so what we call it, a peaceful weekend investing lab portfolio. Lab means where you do kind of all experiments. So that's where we, based on the price action, based on various other parameters, shortlist those companies on a weekly basis on the weekend and see what's changing in them, what exactly is happening. And you can check some of my posts earlier, or I shared this earlier on the YouTube channel, also on the Twitter, If you are not following me, I'll share the link below to my Twitter and also my Telegram group where I share all of those analysis. You join that. So definitely it'll give you insight, because I don't want you to join my community or be part of it thinking that I'll be posting you share ideas or equity ideas. No, I want you to empower. And that's my main mission, to empower you with all those key um, information, actionable information, which I am reading, so that can benefit in your journey. Okay. So in that lab portfolio, identify those companies like we did. I shared one post about the KSS is a listed in Australian company, Luxembourg-based space technology company, and then we're talking about recently there was new um, trend in terms of how food deliveries or how that trend is changing. So there has been many such insights comes out from that lab portfolio, and that helps you. And if you get one of them, my ultimate goal is, can I take one of them out of that lab portfolio into and put into my long term portfolio? Okay, so that's one thing. So diversification is key. Don't put all the eggs in one basket. Make sure you are diversifying quickly, diversifying across different sectors, across different companies, and not everything is in one basket or one particular type of stocks. Yeah, that's one. Point number 5, no cap strategy. When I say cap, means mid cap, large cap, and there's a different classification of stocks. But there's a complete myth in the market. If you want to be a safe investor, buy a large cap, okay, because they're safe. I want to give you examples of GE, General Electric. That was a large cap. It was a darling of stock market. What happened to that? I want to give you another example, Blockbuster. What happened to that in Netflix? Go and do your study. And for example, I give you another company, Infosys, on the peak days when they were at the really growing 100%, stock collapsed. But what I'm saying is, it is not about large cap, mid cap, small cap. It's about focusing on the business, focusing at the end of the profitability of the business. Because we as a retail investors want to partner with those who are companies who are profitable. We don't want to partner with and in a fund loss making companies and give our capital, right? We don't want to do that. So only look for leaders in the sector. The peaceful weekend investing community which I build is, we go through that exercise, how to identify those leaders. Okay, so once you identify those leaders, then it becomes easier to focus on them, and all you need is one and two, right, of the every sector, and then you just focus on them. That's one thing. So don't focus on this market cap approach, because that will lead you to a wrong approach. That's one of my key learnings. Last but not the least, focus on learning technical analysis. A lot of people focus on fundamental analysis. A lot of people focus on technical analysis alone. But for long-term investing, if you blend them both, that's where the power comes in your hand as a retail investor. And that is where the key, you can make that decision. I will leave the link on the top. There's one company called Evergrande. It's a property company in China. What happened to that collapse of it? If you have not watched that video, that will give you an example of what it means by that. It is one of the topmost companies of China, and it collapsed and lost almost 80-90% of the value. And if you'd have had a technical understanding of that, you would basically, never go wrong with that, and you will be making those right decisions very quickly, because we understand technical analysis as well, right? So that's why you have to blend that fundamental and technical analysis. And once you do that, then you will see the power comes to you. I want to end this video is top 6 learnings from stock market 2021. What I want is just your key takeaway from this video, and type in the comment box below, so that I want to know what was your key learning from this video. And if you're new to my channel, I want you to subscribe and hit the notification bell, and if you're liking a content, you can give a thumbs up too, and so that YouTube algorithm can feed you such contents going forward. And if you want to be part of my community, you can join the free Telegram group, which is linked below, and also follow me in any of the social media, especially Twitter, where I keep sharing a lot of insights. Till the next video, bye bye.